Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachordes, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming UK PMIs and the outlook for the pound. So Marios, retail sales for April are due out on Friday, and their forecasts show a record collapse. But preliminary PMIs out on Thursday are expected to rise. Do you think they'll provide a glimmer of hope?
Hello, Maria. Well, not exactly. Yes, they're expected to rise, but they're expected to rise from very depressed levels, in fact, from all-time lows. So, sure, it's a positive development that these indices are rising, but they're still deep within contractionary territory. So they're still saying that the economy is in a deep recession. Now, another point I would like to make here is that the UK economy was among the last ones to enter a lockdown. So it will probably be among the last economies to exit the lockdown, and that will likely be reflected in the data as well. So what I'm trying to say is that we might see other economies, the European PMIs, for example, on Friday, improve much more than the UK ones, because Europe, for the most part, is exiting the lockdown, whereas the UK is still pretty much in a tight lockdown.
Okay, turning now to the pound, it hasn't been doing well lately. Markets weren't actually impressed by how the UK government handled the health crisis to begin with. What can we expect going forward?
Look, it wasn't just the handling of the healthcare crisis. That was definitely a part of it. But for me, the biggest one was, lately we've seen some comments from government officials saying that, yes, we're spending a lot of money today, but the deficit is exploding, and at some point we're going to have to rein this in. And, the bottom line is that they're already discussing how to normalize the deficit. So what does that mean? That means that once the crisis ends, we are likely to either see tax increases or spending cuts or both. So austerity all over again. And if that happens, that would cripple demand just as the recovery is about to begin. So that's a negative sign coming out of the government. And the other one were the Brexit negotiations. We finally saw them resuming lately, but there hasn't been any progress at all. And the UK is even saying, we are prepared to walk away. And what does that all mean? We have an important deadline coming up. At the end of June, the UK has to decide, are we going to request an extension to the transition period or not? Prime Minister Johnson has said again and again, we won't do that. And that means a no-deal Brexit is back on the table at the end of the year. And the final one is that Bank of England is, discussing negative interest rates. They're saying that they are open to it, that that's an option, that they could enact. Now, I'm not so convinced that they'll actually do it, but the bottom line is that we have a combination of government policy, of markets being fearful of future government policy, a no-deal Brexit coming back on the table, and negative interest rates all in the mix. And that is conspiring to keep the pound weak, in my opinion, and we might see that worsen further over the summer.
Marios, thanks so much. And thanks for joining us at xm.com.